Hi, everyone. Thanks for joining us for today's webinar entitled Faster and Safer Payments, How to Enable Next-Gen Payments for Your Account Holders. I'm your host, Stan Cowan with Effective. Just a couple of housekeeping items I want to talk to you about before we get started. During the webinar, please feel free to ask any questions using that Q&A button. We'd love to answer as many as we can towards the end of the session. So again, just submit those questions using that button. You will not be able to use the chat button in this particular webinar. As you can see on the screen, we've got a couple of industry experts who have both spent decades working in their respective fields. I'm going to turn over the presentation to Abhishek and Ravi so they can first introduce themselves and their respective companies. Abhishek, would you like to start?
Sure thing, Stan. Hi, I'm Abhishek Verganta. I'm the founder and CEO of Pigeon. Pigeon is a faster payments hub that's very focused on getting us to the future, getting us to FedNow instant payments. We were a FedNow pilot participant, and we're now proud to say we're among the first FedNow participants to be live on the network and platform.
So, I'm Ravi, co-founder and CEO of Effective. We are an end-to-end risk and fraud management platform. We operate in real time, try to detect account opening fraud as well as transaction fraud, and we are a close partner of Abhishek and the Pigeon team.
Great. Thanks, Abhishek and Ravi. As you can see on the screen, today's agenda, we'll be talking about how faster payments work, an introduction for that. We'll define that problem, and then we'll go a little bit into the history of how faster payments work, and finally, what is real time? Then we'll also have a few key points you're going to learn today from Ravi and Abhishek: how to meet consumer expectations for all generations, because they differ, how to effectively leverage RTP and FedNow payments, and then how to incorporate those real-time fraud controls. Handing it back over to you guys.
Well, so Abhishek, go ahead. Yeah, sorry.
No, thanks so much, Ravi. And that's really, I think it's important to qualify what a faster payment is, right? Where we are today, faster payments means something a little bit different to everyone. I think certainly we can get faster than ACH, but is same-day ACH fast enough? Is card fast enough? And that's really where I want to dig into the history of faster payments and talk about where we really qualify the beginning of the US's faster payment journey. So in 2017, the clearinghouse launched the real-time payments, or RTP network. This was a very closed loop, small network initially. While it did contain the clearinghouse participants and some of the biggest banks in the country, we really started to see adoption over the last few years, leading to today about 50 million transactions just in the last quarter of 2022, worth about $23 billion. Speaking to some of our Fed contacts and speaking to some of our RTP clearinghouse contacts, that really looks like $23 billion worth of transactions across 800,000 transactions a day, almost, over the last few weeks. But when in 2019, about a year and change after the clearinghouse announced RTP, the Fed announced FedNow. We need to make sure there was some competition in the market and wanted to democratize payments and make sure that there was an option for community financial institutions that did not want to sign up with the clearinghouse. They announced a 2023, 2024 launch date, and we heard all the jokes: Fed now, Fed later, Fed eventually, and got to a stage where weren't really sure if it was going to come out. But the FedNow team did a great job ramping to market, and actually last year announced a July 2023 date, which put us where we are today, with FedNow having been live for a couple of weeks with over 50 participants on the network today. What does that mean for us in context of customers, account holders really expecting immediate payments? What we see is these are transactions that settle in under a few seconds, and we can talk a little bit more about that on the next slide. So a faster payment is something that settles in a few seconds. It's something that's starting to meet that customer expectation of immediate. RTP, FedNow, these are the first new payments rails in over 40 years. We saw ACH launch in the mid-70s, and since then there's not been a single new payment rail. And these are truly the fastest payment rails we've ever seen in the history of payments. These transactions settle in under 20 seconds. And I don't want to overstate that. That is settlement to the master account at either the clearinghouse or at your Fed account in under 20 seconds from origination of the payment. One would expect these to be more expensive than existing faster payment methods, but these are more affordable than wires. These are more affordable than cards. And we really see this restoring competitive advantage to financial institutions who have, we feel, been on the back foot against fintechs when trying to meet consumer expectations. From a liquidity perspective, you now have a new source, a new ability to, on a per transaction basis, manage that liquidity. But just as much, you start to see the needs of millennials, Gen Z. We make jokes about how Amex's marketing campaign used to be "Don't leave home without your Amex." I think really it's now "Don't leave home without your iPhone." Right? Let's make sure that we have an app for everything. Let's make sure that our consumer behavior reflects what it is that we have from a technological perspective, and that's what we see generationally. Millennials, Gen Z really expect to move money instantly, and they already have an app for everything. It's not that I'm going to settle this payment over Zelle because I have it in my bank's app. I'm likely already using Venmo. I'm likely already using Cash App. And to that effect, what then can I do to entrench my financial institution front and center in these fintech apps through APIs, through embedded finance, in something that's generally easy to implement for that cross-generational expectation of my financial institution relationship existing within the applications I already use. That's where we are today, and that's where we see the need for financial institutions to start adopting these types of services, because you need to have an API strategy. You need to not just offer wire, you just need to not offer card. And you need to be able to connect into the networks with little to no lift and with a partner that can actually make sure that you can connect into your core easily. So that said, that's faster payment should not equal faster fraud. And we are really excited to talk more about that today.
It's time for our polling question. It's on the screen. I'm getting ready to launch it here for you. Everyone should be able to see this now. Please take a few minutes to answer the question having to deal with already being connected to RTP or FedNow at this point. You can see the choices there. You've already enabled it. You're getting close to launching it. No, we'd love to learn more, or our account holders aren't really asking for it, or maybe you're worried about fraud. Feel free to take a moment to answer that. We'll leave it up just for a few more seconds. Please feel free. Looks like,
So, Abhishek,
yeah, go ahead, Ravi.
while the audience votes for it, Abhishek, I just wanted to ask you a few things. I mean, we've seen like UPI in India, Pix in Brazil, like truly revolutionized like commerce and payments there, right? So when I'm visiting my home in India, no one even carries a wallet here, and they're like street hawkers, um, even folks like in religious places, like for donations, have QR codes and accept UPI for all forms of payments. Do you think FedNow or RTP could do the same in the US?
I absolutely believe that, Ravi, but I think it also is a matter of consumer education. Where we are today, we need to get to a point where we have the ability to discuss one, what does, you talked about Brazil, you talked about India, right? What is the gap between Brazil and India's payment systems and ours? Is the fact that there's no central authority mandating which system we adopt. That's the key distinction. And I think that's why organizations such as ours, Effective as a fraud partner and Pigeon as a connection partner, are so important, because we need to help standardize the ability to connect and standardize the ability to receive those payments. And it is one thing entirely to have FedNow enabled. It's another to have FedNow enabled in a way that fosters adoption. We talked about walking around India with your UPI apps, but what UPI did really well was they presented an API that allowed easy implementation for any fintech provider also. The apps already existed, the connectivity already existed. So the question then becomes, how do we put these payments in consumer touch points, in business touch points? And that's what I think Pix in India did extraordinarily well. And that's what's yet to be seen as we roll out payments here.
Yeah,
Great.
makes
Thank
a
you
lot.
for that. Yeah, I want to let you both know that most everybody said, no, we need to learn more about faster payments. That was the majority of the results. So that's what they're doing today, learning from you guys. So that's good they're here. Great. Let's continue on.
Awesome. Cool. Yeah, thanks a lot, Abhishek, for setting the context. It obviously we are on the precipice of potentially a huge revolution in the payments and commerce space in the US. And one of the common things that we hear, folks who are very curious about FedNow and RTP is, hey, how risky are they, right? So many banks and CFIs and credit unions have dabbled with Zelle, for example. I've seen their members and customers use Venmo or Cash App and got a little bit bitten by fraud, right? So yeah, completely understandable that many want to be a little bit careful before dipping their toes in FedNow and RTP. But the good part is, or the bad part, is it's no different, right, from any other payment method. Every payment method comes with their own inherent risk because they each have their own value that they provide. And with that value, there comes pros and cons, right? And the same with RTP and FedNow. And the best part is, though, that because we are just beginning this off, we can prepare ourselves from the very start and have systems in place that can avoid some of the issues that we have seen with other payment rails right from the beginning. Some of the differences here, like Abhishek mentioned, these are settled in real time, right? 20 seconds end to end. Just imagine that. And not just processing through the RTP or FedNow network, the money sitting in the master accounts. And during that time, we also need to run our fraud and risk checks, right? So how do we build these systems and have these systems in place that are able to adjudicate these transactions in real time? And the second is, unlike ACH, for example, these payments are one way, right? So there's no protocol to, for example, pull the money back once the money is settled, it's settled. So that comes with different kinds of risk that is completely tackleable, that we'll speak over in the next slides. So these are some of the things that we would say you should keep in mind. Coming over to the topic of the kind of risks that we as a company have been seeing in the whole faster payments network, I would say there are broadly three things. Right? The first and foremost, which most of you would have expected when folks are using their mobile app to initiate payments, or a web app to initiate payments completely online. There's no like visiting a branch to do an RTP or FedNow. There's always a risk of account takeovers, right? And this is the same kind of issues any mobile app faces. And the best part is there's been so much research and hardening of the system and techniques to identify account takeovers that the same technologies can be utilized in these scenarios, right? So the same technologies that Google uses, Facebook uses, Twitter uses to detect account takeovers, we have access to those technologies as well to protect your customers from facing these issues. The second two are very interesting. These are, I would say, scams that lead to fraud. The first, which is potentially pretty common, is elder scams, where generally more senior folks are targeted. In fact, our very own Stan came across a situation just very, very recently. So Stan, you would love to have you share what you faced.
Yeah, thank you, Ravi. Very timely. Literally 1 hour before our webinar today, I got a call from a bank in another state. Turns out it's the bank where my father banks at. My father's nearly 90 years old. He has no access to internet, never has, never will, still has an old-fashioned flip phone. So he was called today and told that I was in jail and needed $9,000 to bail me out. Instead of trying to call me to see if I was in jail or hurt or even call my wife, he went to the bank immediately and started the process of taking out the $9,000 and following the instructions of the caller. Luckily, the bank person stopped him and called me, and I tried to explain to my father, remember the company I work for? We prevent fraud. And I thought I instructed him, but he's close to 90 and he fell for it instead of really talking to me and trying to call me or my wife. So it was a good lesson learned for him. And thank goodness we had great bankers at his bank branch that he was able to stop. And so he has learned a good lesson today. And that's why I love working for the company I work for. It's great education, a real true life story just a couple hours ago today. Thanks for letting me share, Robbie.
Thanks, Dan. And we see this time and again, right? So it's, hey, pay, like your son's in jail, he needs bail money, transfer the money right away. Or someone's injured, they don't have insurance, their insurance is not getting accepted, you need to transfer money to the hospital or to my number. And multiple of those things, right? Hey, this is a jewelry that your granddaughter would love. Pay us, we'll give you a 50% discount, we'll ship the item. So that's something that we see very, very frequently. And imagine that Stan's dad went to the branch and the bank could intervene. But if they're doing this via an app, the bank has no say, right? So they don't have the opportunity to intervene. So we need to have systems in place that are able to detect these unusual behaviors, looking at their past behavior and things like that. And similar things are like romance scams. This actually targets much younger folks, and they fall for it as well. And many of you might have seen like the Netflix series called Tinder Swindler. This is a very common scenario that we see, where, again, very similar to what's happening in the endless scams. Folks try to scam young people into moving money, saying that, hey, I'm stuck in the city, they're not accepting my card. Can you transfer some money over to my account so that I can pay the taxi person or pay the hotel and that's so these are some of the common scenarios that we see. And as a bank or a CFI, we need to be prepared to tackle these kind of issues. Right? So Dan, can move to the next slide, please. I can talk a little bit about how you do this. So to start off from how you solve these, I would say there are fundamentally 3 to 4 points that are necessary to keep in mind when you're building out your fraud strategy for something like instant payment. Right? The first and foremost is user experience. The whole theory around instant payments is giving instant payment gratification to users, and that is critical. Right? So we cannot diminish that user experience by adding undue friction to the users. The second is decisioning needs to be very fast, right? Because we have just 20 seconds to settle, and of that 20 seconds, there are only a few seconds available for your adjudication to happen. The third is setting arbitrary limits just defeats the purpose and the user experience and the whole reason of instant payment, right? You've seen this in the past where certain CFIs have set up daily limits on Zelle transactions or on even Venmo transactions that their customers could perform to such a low number that they just stop using that payment method, right? Just because they faced a little bit of fraud and to be careful, they just cut it down to, sometimes they've seen like $20 a day, right? So it as well not support that payment method. So this is something that we need to take care of right from the beginning, that we don't set these undue limitations on this payment method. The fourth is these payment methods need to go through all kinds of compliance checks, right? So like any other money movement, you have to do your BSA and AML verifications, and these need to happen at scale because P2P instant payments can result in very, very high volumes, similar to cards and other faster payment methods. And we have seen that in India, we've seen that in Brazil. So unlike ACH or checks, where the volumes could be very low, here the volumes could be very, very high. So how do you do these compliance evaluations for money laundering and BSA at that scale is something that we have to think about.
As we move,
please.
as we move to the next slide, just a reminder for everyone, if you have any questions, feel free to click that Q&A button and just go ahead and ask them, and we'll get those answered at the end. Please continue, Ravi.
Awesome. So what's needed, what's available, and what kind of technologies that you can implement right away when you decide to start your instant payments journey within your CFI, right? The first and foremost is, like you mentioned multiple times, you need to have a system that is real time, right? So you need to be able to adjudicate a transaction in flight during those 20 seconds of time, preferably in under a second or in under milliseconds, right? You want to keep the user experience really, really good. So if it's a good transaction, we have to approve it right away. The bad transaction, you stop and do additional verifications and then let it go. Second is, we should try not to set these undue limits where because of one bad actor, you are impacting all of your customers and all of your members, and they face the same amount of friction that even the bad guys do, right? So we need to add friction only when we observe suspicious behavior. And you can do this with building very, very dynamic user level controls using AI and machine learning. It's very hard to handle this manually, right? So you can't sit and write rules and limitations and thresholds for every single member in your bank and maintaining it on a consistent basis, right? So you need the power and flexibility of something like a machine learning system that's able to detect how a user behaves at certain time of day using certain device at a certain location, and is able to dynamically figure out what the limit should be and what kind of action we should take as a CFI to when we see a suspicious transaction, right? So should we trigger a two-factor auth? Should we pause the transaction? Should we let it go and then give a call to that user saying that, hey, this has happened, so that we prevent future bad transactions? All of that can be very dynamically controlled using a machine learning system. And then finally, you need to have a system that can operate at very large scales, right? So potentially like the system that you might have to do BSA and AML checks for tech transactions or ACH may not be able to scale to the volumes that you will see for instant payments. You need to have a system that can operate and process very, very large volumes, file reports to FinCEN or other regulatory bodies en masse, find trends across thousands to hundreds of thousands to millions of transactions, and also able to share suspicious behavior across your peers, right? So we see these attacks always happen in rings where a set of fraudsters target one CFI and then move to another CFI and use the same kind of behavior, right? So if you are able to identify this as a consortium, then we become very, very powerful, right? So the very first time we see some kind of suspicious activity, we notify every other CFI to be careful, update the rules, update the models and the machine learning models to be able to detect that behavior very quickly. All of this is available, right, with one click. And there are technologies available in the market including ours, that you can use out of the box. Like we have built and trained these systems across very large organizations like PayPal and Google, and we are using that same kind of technologies to uh, offer to protect these new payment systems like that. Cool. Next slide. We've spoken about both, right? The payment rails and the new technologies that folks like Abhishek and Fijin are able to provide. And then our complementary offerings on fraud and risk evaluations that go hand in hand with the payment trails. So I'll let Abhishek again summarize about what's available right now in the market, how you can enable FedNow and RTP in your CFI, and how easy it is to do that. Over to you, Abhishek.
Absolutely, Ravi, and thanks for that. I think we talk about customer expectations and payments changing, right? We talk about needing to be front center in the app while also preventing fraud. So I think they feel like conflicting ideologies because we're talking about making payments frictionless. We're talking about making payments as easy as possible. But that friction is what used to allow us to have the stopgaps we needed in place to prevent fraud. As an example, with Stan's story, unless you have a fraud engine in the background performing the tasks that banks officers did when they prevented Stan's father from actually sending that payment outbound, you have a similar level of risk that you need to be able to address through your implementation of these. But that doesn't mean that you extend the transaction times. So it's important to have a faster payment solution that's easy to enable, affordable to enable, quick to implement so that you can get off the ground quickly as others start to implement these types of solutions. But just as much, puts you in a position where through APIs, through rapid processing, we talked about how these transactions settle at 20 seconds on the upper end. But you think about a 20-second transaction, that's like at the front of a restaurant, saying bye to your friend and then walking along the parking lot, waiting for your to reach your cars and finding out that you've parked next to each other. That is the most suboptimal user experience possible. That's suboptimal from both a app perspective, that's suboptimal from a fraud detection perspective, and that's why it's important to take advantage of partners that have new technology tools that allow for low latency, low processing, while still retaining the frictionless experience that your customers expect. And I said this earlier, I'll say it again, faster payments should not equal faster fraud. They should get us to a state where you feel safe about them with a fraud engine in the background, like what Ravi's team does.
Yeah, thanks, Abhishek. And yeah, like exactly what Abhishek mentioned, right? We have learned so much over the course of time working across the other payment rails that we now have nailed down the ease of implementation, the safety of implementation to the T, that most of the CFIs who want to use instant payments, either RTP or FedNow, can do it very, very quickly and very, very safely. Right. So I think our technologies have evolved so much that our implementation can be instant as well, right? So I think it's the right time, and we are on that precipice of a huge revolution in commerce and payments in the US, right? So it's the right time to do that. I think we can move on to some questions.
Yes.
Stan, while you collate it, I have a few that I would love to ask Abhishek as well, because I'm also super curious about learning more about this new payment system. Some of the things, Abhishek, that I hear from our customers is that, hey, I have Zelle, or my customer members use Cash App and Venmo, why RTP or why FedNow at this time? Okay. I have a follow-on to that as well, but I'll let you answer this.
No, that's a great question, Ravi. And I think that if we limit the use cases for faster instant payments to peer-to-peer examples, I think we do ourselves a huge disservice in terms of the amount of innovation that's come out of the development of these platforms. Use cases such as earned wage access, right? So RTP today, you're able to receive payments from Uber, Lyft, Grubhub, DoorDash, and the list goes on and on, where you have members of your community, members who are account holders at the financial institution that want to cash out instantly and aren't able to do so. So those cards and those funds end up in a prepaid card where you're now looking at all of these funds being unavailable to you as a financial institution to your deposits. That's earned wage access. That's just one use case where you can get foster financial inclusion, get folks to start using faster payments without it being a Cash App or without it being a Venmo. Another great example is when you have Treasury Department payments coming live on the FedNow network near term, where we have already seen that the Treasury Department is a day one participant, but the use cases that they're going to participate with are still open-ended. It's still something that we're continuing to work through. So that's really one of the big upsides that I see connecting into these networks near term.
Super interesting. So basically, RDP FedNow are not just P2P, right? So I think that's a very misconception. There's a common misconception in the industry that it's just meant for P2P. P2P is a great use case for it, but they do a lot more, right? Practically everything that every other payment method can do.
No, and I mean, we think about payments only in terms of paying other people, other individuals, but we have to start considering use cases beyond that, right? As an example, getting I had the misfortune of closing on a home recently. We're really excited about the home, but the closing process was miserable. Right? Trying to get the funds actually where it needed to go. I think the ulcers you get when you've hit the send the wire out button and you're not sure if you're sending it to the right place. That's where it starts, and then you find out that in a back-to-back closing, the folks that are on the other end of your transaction haven't wired enough to your closing attorney, so you don't have enough funds to wire to close on your home. That's the kind of thing that you don't think about having friction until it does have friction. Funding car loans, the use cases can go on and on if you really think about all of the friction touch points that we have in our day-to-day lives. But Ravi, can I ask you a question in return as these Q&A questions start to come in? So how you talked a lot about AI and machine learning, and for us AI connoisseurs such as myself who've opened ChatGPT once and claim to know everything we need to know, how do we start to look at the types of use cases that you can solve for, and how do you actually train your AI? Do you have third-party databases also integrated into Effective?
That's right. Great question. I might geek out, so please stop me if I'm going too technical, which I can stand. But yeah, so that's a very common problem, right? So training an AI when there's a cold start, right? So when it's a brand new payment method like FedNow and there is no data out there, how do you train it? I think now there's so much new technologies available in machine learning and AI that we are able to leverage at this time. Right? So things like reinforcement models, reinforcement training, where you are able to basically train on common fraudulent behavior across other payment methods, right? and generalize the models in a way that it can be applicable in multiple situations, right? And then what you do is once the FedNow transactions start coming in, you don't need that much of data to customize your models to perform specifically for FedNow. So you just need a um, few instances. Sometimes it's called one shot and or few shot learning models where you need just a few instances of behavioral patterns to able to truly customize and have an AI that's able to work really well for a new payment system. So that's something that is available and that we take a lot of advantage of at Effective. Um, there's also other kinds of things where, for example, like training a model and using that model to infer the decisioning are slightly different, right? So your training of the models can happen behind the scenes, which we do, and then inferring happens instantly. So the model that is trained is able to decide immediately, right? For example, Abhishek mentioned ChatGPT, where we ask it a question and it's answering elaborately, right? So it's not actually learning new things or going and researching things when we ask the question. It already has the training data and all the knowledge already in its place. It is just inferring the question and trying to answer the question with the knowledge that it already has. Right? So it can be very, very fast, and that's what we see with ChatGPT, for example. So those are some of the things that we do. And every day there's new research, new developments happening in the AI and machine learning space, and we are very much on top of it, and we try to use as many of these techniques to fight fraud.
So Ravi, so really, when people say, listen, we don't have enough data points to understand what fraud is going to look like in these on these new payment rails or in this new payments landscape, you can honestly tell them that they're incorrect.
That's that's right. Yeah. So because fraudsters, so the type of behavior that we see is broadly the same, right? So, and how you try to fight fraud is when you boil it down to very simple things. I know my data science team will kill me because I'm making it too simple, but it's broadly a two-step problem, right? The first is you try to find anomalies, right? So, is some behavior an anomalous behavior? And that you do by basically trying to identify what is a typical behavior. And generally, if you assume that the overall population is good, and if you just train your models, sometimes these are called unsupervised models, you just train your models to identify what is typical behavior. Now, what you can do is, hey, I have this new transaction. How far away is it from a typical behavior, right? If it is very far away, then it's considered anomalous. So that's the first step. Now you know that it's an anomalous transaction. It could be a good or a bad one. And what you could do is then run what we call as classification models that try to classify that anomalous behavior to say, hey, is it a known have you seen this anomalous behavior in the past? And was it good or was it bad? Right. So there we need some historical data to classify it whether this anomalous behavior was actually bad. If you don't know it, you can still have protections in place by doing things like two-factor auth or additional verifications on that transaction and add a little bit of friction for the first few transactions. And then once you identify that, hey, this anomalous behavior is actually a good one, right? It happens uh, for, uh, let's say, uh, there's a new, I mean, I'm aging myself, but let's say there's a new Harry Potter book, right? So there'll be a sudden spike in transactions for a certain kind of queue across a few merchants, right? So we the first time we see it, it'll be very anomalous, right? Why are there uh, tens of hundreds of transactions of $35 happening at midnight, right? At certain merchants. So we pause and look at those first few anomalous transactions. Most of them will go true, right? Like the two-factor auth will come positive, and then we'll quickly realize that, hey, these are anomalies. These don't typically happen, but these are all good ones, and we try to classify them. And the same thing, the opposite of that, where we notice a few anomalies, add a bit of friction for the first few, and then quickly remove that friction as soon as.
So if you ask my wife, all good behavior is anomalous. So that's a different discussion entirely.
Yeah, that's true.
But Stan, should we go ahead and
Yeah.
open it up to the questions?
For sure. Thank you, guys. And that was not too geeky. I didn't think so, Ravi. I learned a lot from that. Question number one, what resources does the bank or credit union need to implement a faster payment solution?
Ravi, if you don't mind, I'm going to go ahead and take this one.
Please, yeah, the expert.
But really, there's a couple key things that you need to do before you start implementing a faster payment solution. First, establish your strategy. Understand how you want to cater the solution to your existing account holder base, and then take a deeper dive into, okay, if this is how I want to implement, I need a technical resource, or at least a resource that can get technical enough to help us get connected into your core. And then two, an operational resource, or somebody that knows how you want these transactions to post, what GLs do you want these transactions to post against, and then making sure that you've done all the heavy lifting you need to do from a paperwork perspective, which you're as a partner, we can help you through, others can also, but making sure that you filled out the correct operating circulars, the appendices you need to fill out from the Fed, and similar with your third-party service provider designation form, as an example, with the clearinghouse. All of those different pieces come into play depending on what networks you want to roll out, and then what technical touch points you have. From there, it's then understanding what it's going to look like from a 24/7, 365 uptime environment. How am I going to keep those accounts funded? Who's monitoring the transactions overnight? Some service providers, such as Pigeon, do offer a managed operations piece. So considering that as an option versus trying to hire more staff or already bogged down operations teams, because unsung heroes of financial institution are always the back office folks. So giving them more work is never the best way to solve an operational concern like this. But that is a high level overview of the resourcing that you would need, and we can take deeper discussions on that on a case-by-case basis.
Great.
Thanks.
Thanks, Abhishek. Looks like another question came in. What kind of development work is required to set up a fraud monitoring system?
Oh, wow. That's a loaded question. And I think very similar in line with Abhishek. So generally, like systems like Effective, it's that you want to operate in a real time, usually need API level integration, right? So there's a more upstream system, there's a payments hub, or a core banking system that sometimes supports payments. We need to plug into those APIs so that we can get the transaction payload in real time and are able to process that transaction and adjudicate and let you know what kind of decision that you have to take and whether to approve or decline. Usually, most of the systems come out of the box with pre-built decisioning strategies that you can use from the first day onwards. So you don't need to really configure anything on your end. There are well-known industry and battle-tested strategies that you can use. But then slowly, as you get more traffic, as you see more kind of patterns, you can customize a lot of these strategies to work even more specifically for the audience that you serve, the demographics that you see within your bank, and so on and so forth. So it's very easy to start off with. Most of it is already pre-built. You just need to plug into the API, but you have the flexibility to customize and tweak as you go ahead. For some examples, like Pigeon and us, we come pre-integrated, right? So if you use Pigeon, you don't need to do any other work. We are already pre-integrated. It's just a flip of a button. You'll have Effective's fraud detection system already running for all of your transactions.
Great, thanks. Thanks for that, Ravi. Looks like a number 3 question came in. Is it necessary to file SARs or CTRs for FedNow?
Great question. I can take a quick stab, Abhishek. Maybe you could also chime in, but yes, quick answer. It's any other payment method that is prone to BSA and money laundering regulations. So you have to file. The problem is, though, that the volumes can get very high, right? So it's very critical that you automate these processes and have systems in place that are able to evaluate transactions at a very high scale. And then also file SARs in a more intelligent way, right? So again, we don't want to bombard FinCEN with hundreds of thousands of SARs being filed. We need to have a smart system that's able to detect and consolidate like a report, consolidate kind of behavior or a fraud ring or a fraud pattern into a single report so that we can file accordingly to FinCEN. So we need to have some of those systems in place, but it's very important as the usage is going to increase, and that's going to happen regardless. We will start seeing some of these suspicious money laundering style activities happening on these payment methods as well.
Yeah, completely agree with that, Ravi. And for more information on that, also, Tal, I'm going to take a moment to plug the payments professor, Kevin Olson. He does have information about this available on YouTube. So highly recommend for operational concerns and considerations. He's a great resource to be able to reach out to.
We're big fans of him. I think there's one more question that I just see. It's related to AI. So can you please elaborate on what's available in terms of AI? What are the applications? Since payments happen quickly, would AI processes happen quickly as well? Does it affect the whole instant payments and make them less instant? Great question. I think we covered this a little bit previously. Obviously, the inference of the decision making is instantaneous, right? Like it happens in sub-second time. So it shouldn't add any latency to the transaction, right? To the transaction flow, or else it defeats the purpose of instant payments, like the person asking the question rightly pointed out. Right? So our models, ideally, the AI shouldn't add any additional latency. We have only 20 seconds end to end, and that is at the peak, right? So ideally, most transactions even settle even much faster than that. So our systems need to be very real time, and usually real time fraud engines don't add.
No, and that's my take also, Ravi. I think it depends on the overall tech stack. If you choose a vendor that has a significant amount of tech debt and then try to integrate newfangled fraud solution behind it, you'll still have significant amount of latency. It's just unavoidable. So the fraud solution needs to be well built, really good, really responsive. Then the payments engine on top of that needs to be well built, well thought through, and really needs to consider what end-to-end transaction flow and transaction timing looks like. Otherwise, while you will be within the network SLA, it'll be as suboptimal payments experience as one can have within that 20-second window. So.
Yeah, exactly. In fact, great point, Abhishek. So we see this again. I've experienced this in India where this has picked up quite a bit, and there are multiple fintechs competing with banks which have apps that have enabled UPI there, right? And we've seen some are terrible at it, including one really huge, like multi-trillion-dollar company that have that has a strong presence in India. They have an app, and even with all of that technology behind them, their app is the slowest, right? And they saw like a huge exodus of users from their app to another one that literally rewrote everything from scratch and built it specifically for UPI, and the transactions just settle multiple seconds faster than the other one, right? And also the settlement rate is much higher. There are less failure rates and so on. So it can make, so when you're talking in seconds, even a few seconds of difference is a tremendously different user experience, right? And that that makes a difference. Yeah.
It's
Sorry.
just really painful, right? You set a stopwatch and just sit in silence for about, so RTP, right? Their SLA is 5 seconds. And so if you just set a stopwatch and then sit in silence for 5 seconds, you'll understand the amount of pain even 5 seconds worth of transaction time creates. So exactly agree with you. If you're even if we're talking of 500 milliseconds, 750 milliseconds, that's still a lot. But when you're talking multiple seconds, that's tech that needs to be avoided.
Great, thanks guys. I think that's all the questions we have. So on to our final polling question. Let me pull that up for you guys. Let's see here if I can do that here. Let's do it. Let's launch. There we go. Finally, got it. All right, you guys can see the question on the screen. I'll turn it back over to Abhishek first and Ravi to wrap up with final thoughts.
So as you all answer this polling question, thank you all for attending. Thank you all for watching this if you're watching it after this was recorded. But really, the focus needs to be as FedNow, as RTP gains steam. One, how do I adopt this? How do I strategize around rolling these out to my account holders? But then two, how do I do that in a frictionless way that doesn't make me compromise on the integrity of my fraud prevention operation, on my need to be compliant? Having a compliance payment solution is most of the battle, but then having a frictionless experience and putting your frictionless experience in a place where you can be comfortable going to bed at night, not laying awake wondering, is today going to be the day that I'm exposed to $1 million worth of fraud? That's the kind of thing that you really need to strategize through, think through based on your use cases, and know that you're creating a user experience that's going to be meaningful, not just operationally feasible.
Yeah, thanks, Abhishek. I think you've summarized it really succinctly. Nothing more to add. Yeah, I think this is something that is going to happen in the US. It's just the start of a huge change in the payments and commerce space, and it's exciting times.
Great, thanks
and
to
thanks
both of you.
everyone for attending. Yeah, thanks Dan, and thanks first of all, yeah, to Abhishek as well. It's always wonderful to chat with you, and this is no different.
Likewise, Ravi, and Stan, thanks for putting on a good show. Really appreciate you all inviting us and putting this together. And again, to the attendees, look forward to your feedback and hope to hear more from you after this.
Great, thanks again, everyone, and please enjoy the rest of your day.